This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we have seen a little bit of pressure seep into the market, specifically corn. And I'm wearing the duck tie today because corn has been the dead duck as of late. We've been kind of a stick in the mud, treading near the low end of the range here today. 375.25 is a must-hold line in the sand for the bull camp. This is the January 16th low. If we cannot defend this, break and close below, I think you see a potential selling accelerate and take us to those contract lows near 365.75. Another caution flag that we're looking at. Last week we marked lower highs. This week we also marked lower highs. We need to see prices get back out above 383 to 385. The inability to do this, I think, keeps the bears in the driver's seat very near term, especially with kind of a lackluster news wire coming across. Now, as far as the soybeans are concerned, things look pretty weak there as well. We've had a little bit of a relief rally, but these rallies have fell short into the close, and so we've left some tails, which is not necessarily a good sign. A consolidation higher might lead to a bear flag and a break lower. 880 is what the bulls want to see conviction closes out above, but really more ideally above that 886 to 889. We need to see the market get out above there. Until that happens on a closing basis, the bears have a little bit of an advantage. If we can't get our ground underneath us, there is the potential that we do retest those contract lows near 841.5. Do think beans are undervalued here, but the technicals and the money flow look very weak here in the near term. Wrapping things up with the wheat market. Wheat, we've been talking about this for the past several weeks, the possibility of a longer term top being in. Chicago, March contract, 565 would be the right shoulder on a head and shoulders formation that seems to be forming. If we break and close below 540, I think that's when you see things accelerate and you could kind of see a big push and a whoosh lower towards that 520 area. So again, longer term bearish on that Chicago wheat contract. The other grains, more mute, but the bears certainly have control on the technical front. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.